Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 14th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the ECB's Christine Lagarde warns of the severe consequences of a global trade war as Trump threatens the EU with 200% tariffs on wine.
Hopes that a US government shutdown will be averted give markets some respite after the S&P 500 enters correction territory.
Plus, Putin's pitch. The Russian leader says he's ready to negotiate with Trump on Ukraine, but stops short of accepting a temporary ceasefire.
Let's start with a roundup of our top stories.
The president of the European Central Bank is warning of a severe global fallout from a trade war with the United States. Here's what Christine Lagarde told the BBC's Hard Talk programme, hosted by Stephen Sakor.
If we were to go to a real trade war, where trade would be dampened significantly, that would have severe consequences. It would not be cause for concern. It would be severe consequences for growth around the world and for prices around the world, but particularly in the United States.
But also in Europe. It would push Europe into recession, wouldn't it?
You know what it's doing at the moment? Stirring European energy. It's a big wake-up call for Europe. Maybe this is a European moment yet again.
Lagarde also told the BBC that Brussels had no choice but to retaliate against the US following its decision to implement 25% tariffs on global steel and aluminium imports. Her comments came ahead of President Trump threatening to enact a 200% levy on European wine, champagne and other alcoholic beverages. The US president made the threat in response to the EU's countermeasures targeting American whiskey, among other products. US Commerce Secretary Howard Lutnick has told Bloomberg the EU duties are disrespectful.
If you make him unhappy, he responds unhappy. But come on, let's get back to the core basics here, which is a trading policy that says America has allowed the world to lean on us, to take from us, to grow off of us. And now it's time for a little balance. We've got a $2 trillion budget deficit. We want to bring certain jobs home. Let the president do the right thing for America.
It's the US Commerce Secretary Howard Lutnick. Trump also said he would not repeal tariffs on steel and aluminium that took effect this week, nor would he back off on plans for sweeping reciprocal tariffs on global trading partners set to start as soon as the 2nd of April.
The growing trade tensions come as the European Union's foreign policy chief has warned that China could be the main beneficiary of growing US-EU hostilities. Here's what Kaja Kallas told Bloomberg on the sidelines of a G7 meeting in Canada.
We are not interested in trade wars. There are no winners in trade wars. Who is laughing on the side or looking at the side is China, who is really benefiting from, U.S. having a trade war with Europe. But it is also clear that if these tariffs are put on us, then we are also defending our interests.
The comments from the EU's top diplomat come as China's economy is expected to have shown resilience so far in the face of growing US tariffs. According to economists surveyed by Bloomberg, consumption data due out on Monday will show retail sales picking up and investment staying steady from last year's full-year figures.
Democratic leader of the US Senate, Chuck Schumer, has paved the way for lawmakers to avoid a government shutdown, just dropping his threat to block a Republican spending bill. The decision was made despite a growing number of Democrats wanting to use their limited leverage to restrain Elon Musk's cost-cutting efforts. Addressing the Senate, Schumer explained why he decided to walk back the threat of a shutdown.
A shutdown would give Donald Trump and Elon Musk carte blanche to destroy vital government services at a significantly faster rate than they can right now.
Schumer indicated that Democrats would vote with their conscience on the legislations rather than as directed by leadership. However, the longtime leader carries significant influence within the caucus and he's likely to amass enough support to avert a shutdown.
Well, the prospect of avoiding a US government shutdown has boosted market sentiment after another bruising day on Wall Street that drove the S&P 500 to a 6-month low. Thursday's 1.4% drop pushed the 3-week rout past 10%, and it means the US benchmark is now in correction territory. The slump has also erased $5 trillion from US stocks as investors pared risk. But President Trump's former Treasury Secretary, Stephen Mnuchin, says that sentiment is overly bearish.
I know there's some talk about, are we going to go into a recession? I don't see us at all going into a recession. I think we could have a little bit of a slowdown in the economy as we pull back on government spending, but I don't think investors should be concerned about a recession.
That was the former US Treasury Secretary Steven Mnuchin speaking there to Bloomberg. Asian stocks and US and European equity futures have rallied on Friday as signs that the US will avoid a government shutdown have helped to boost market confidence.
More than half of Britain's senior ministers have urged the Chancellor Rachel Reeves to rethink her plans to scale back welfare spending. Bloomberg has learned that a cabinet meeting turned into an intervention over the planned cuts. James Woolcock has the story.
One person at the meeting openly warned ministers were considering resignation, only to be backed up by a second, and then a third added the cuts go beyond anything seen under austerity. We report the Prime Minister had to extend the meeting so all 27 ministers at the top of government could vent. It's an extraordinary sign of the growing concern at the highest levels of the Labour Party. It's unlikely to change the policy. The Chancellor has already sent her plans to the independent forecaster. But the question number 10 must be wondering after the backlash is, will that policy get enough votes? In London, James Woolcock, Bloomberg Radio.
Russia's Vladimir Putin says that he wants to discuss a proposed ceasefire in Ukraine with Donald Trump. Speaking at a news conference yesterday, Putin said that his administration supports the idea of a peaceful end to the conflict, but warns that any truce should lead to a long-term resolution. Following the news, US President Trump told reporters at the White House that negotiations are progressing.
We're getting words that things are going okay in Russia, and it doesn't mean anything until we hear what the final outcome is. But they have very serious discussions going on right now with President Putin and others.
Donald Trump speaking there during a visit by NATO Secretary General Mark Rutte. Meanwhile, the US has quietly tightened sanctions on Russia by restricting energy payments as it continues to pursue cooperation from Putin during peace deliberations.
Those are your top stories on the markets after we saw the S&P 500 and NASDAQ in correction territory yesterday. We are looking at US stock futures higher this morning, up 0.6% for S&P E-minis, 0.8 higher for NASDAQ futures. European stock futures also pointing higher, up 0.5%. And we're seeing a big rally in Asian shares at the moment. The MSCI Irish Pacific Index up 0.7%. The CSI 300 Index in China up by 2.3%.
Those are the markets. In a moment, more on Donald Trump's tariff threats against the EU, and we'll also be digging into the market reaction. But before we get to that, a nice story on the Bloomberg terminal about how easy it's going to be to trot around the globe and understand everyone.
This is one of those stories that either makes me feel very excited or very old, because this feels like Star Trek coming true.
Right.
Our chief technology correspondent, Mark Gurman, is reporting that Apple is working on a feature for its AirPod earphones that would live translate an in-person conversation. So you speak to someone in your language and they can hear it in theirs. It's science fiction-y if you look at it in one way, but apparently it's actually already been present in some of the rival products to AirPods as well, including Google's Pixel Buds. They've had the option for years, but he says that Apple will be rolling this out from later this year.
Part of my heart breaks for this because, of course, as someone who studied modern languages, this was
not
once
so
a
modern
job.
now, is
not
it?
so modern. This is once a job, being a translator, and also it's the fact that languages around the world are disappearing very quickly because we're so united. And
well, I mean, the other question of this is this going to actually be something that's going to feel like science fiction, or is it going to be like being on a bad phone line with someone where there's a really long delay as when you hear the other person? So I think you can probably stash away your language skills for a bit longer, Caroline.
Yeah, there
Still
you
leverage them for a while.
Great story on the Bloomberg terminal for you to read this morning.
Well, let's bring you more now on the latest tariff threats from Donald Trump targeting European wine and other alcoholic drinks with a 200% levy. Our EMEA News Director, Rosalind Masson, joins us now for more. Ros, good morning. How much of an escalation is this from Donald Trump?
Well, it is certainly another move by Donald Trump. He's threatening in this case. He's not yet saying he's going to impose this tariff. And in fact, he's threatened to impose hefty tariffs on European wine, champagne, and other alcoholic beverages before and back down. But this is in the realm, of course, of what's been quite a piecemeal approach. We've had a lot of uncertainty in this tariff gambit so far. There's been reversals by the president. There's been threats. There's been changes in direction. So it's very hard to know what to make of this, and that very hard, I guess, for the people on the other side to know how to respond. Certainly the French trade minister said that this is Donald Trump, quote, escalating a trade war he chose to unleash, and saying that Europe will not give in to what he called threats and will protect industries. So certainly Europe's still got more in the bag if Donald Trump does escalate further with Europe. We know that. They're the tariffs that are due to snap back, obviously, at the end of the month. But there's a lot more that we know that Europe has prepared. And so certainly we're just in this realm of tit for tat. So if Donald Trump does indeed impose this tariff on booze from Europe, that Europe will respond.
The last time that Trump imposed tariffs, though, on these products, he reversed course. He reached a deal with Emmanuel Macron. Does that say that there is a space maybe for negotiation here, as we do see the kind of temperature and the rhetoric beginning to get more tense?
Well, certainly, as this trade war has shown us, there's 100% room for negotiation in all of this. And that, in a way, perhaps is part of the tactic of the US administration, is to come out hard, to threaten things, and then to see if they can negotiate the way back out of it again and get something that they can claim as a win. And as you say, Emmanuel Macron was key last time. Perhaps, again, a call from him to Donald Trump might just do the trick. We do know that the US Commerce Secretary, Howard Lutnick, was due to have some calls with different EU officials last night. We're not exactly sure what came of those as yet, but there are those conversations going on, and we can see that's very much the case with every country around the world. There are trade ministers, for example, from different countries in Asia over in the US this week having conversations directly with US officials. So it does seem that at least the US administration is willing to talk. Mostly, though, they just want to see what they can get for themselves out of those talks.
OK, Rosalind Matson, our EMEA News Director, thank you very much.
Well, markets have been rattled by the trade tensions, but US futures have been boosted by news that a government shutdown has been avoided in Washington. Our Markets Live executive editor, Mark Cudmore, joins us now in person in the London radio studio. Good to see you, Mark. In terms of the shutdown news, do you think that reignites risk appetite given all the uncertainties?
No, not really. I think there's enough kind of negative catalysts next week, potentially negative catalysts. I think, we've obviously got the Fed upcoming. What I think the bigger backdrop here is that we've had a really rapid correction from record highs. And so, the market it was ready to consolidate. I mean, many people were looking for a relief rally earlier this week. We actually enter in some of the best seasonality for the US stock market, actually from March 15th, kind of traditionally. So I think this is a little bit like, it's a positive story, don't get me wrong, but it was a market that was ready for a little bit of a bounce. Actually, the way I see this week is I'm surprised how negative the price action has actually remained, how rapid the fall has been, how tepid the bounces have been. And so I just worried we have one more kind of clean out before maybe even before the weekend or into next week, before we get then a couple of weeks consolidation. Though longer term, I still think this is a market where people are selling rallies. So I think you might get a bounce of 4 or 5% over the rest of March. But ultimately, I think people are going to sell into this. They're not going to wait for any record highs. This is a US stock market that is going to underperform for the long term.
Yeah, and indeed that's part of the sentiment being reflected in the latest Markets Live Pulse survey as well, that investors are most bullish on treasuries relative to stocks for at least 3 years. The flip side of this?
Yeah, absolutely. And, it's interesting to see that kind of short-term trend, because that survey we've kind of run about that question we've asked about monthly, roughly, for about the last 3 years. And normally, over on that over the 3-year basis, first of all, there's quite often been a skew towards stocks, but normally both are pretty close to the 50% mark. So it's quite a large skew. It shows there's a real change, like a dramatic change in sentiment. We've not seen anything close to this. Not only is this the highest level of kind of pro-treasuries over stocks, but we've not even seen anything close to that. And there's a general kind of theme that, people no longer expect US stocks to reassert that exceptionalism. So US stocks as a share of global market cap reached a record of 50.86% on February 3rd. They're now down, I'm not sure exactly where they are today, but I'm going to say they're down about 48%. They've fallen a few percent from there. And only 9%, I think it was in the survey, expect us to kind of go back to that record high again. And, I'm not saying everyone expects the ongoing US underperformance, but certainly the market's already convinced US is going to stop outperforming. I am very firmly in the camp it's going to underperform.
OK. We also saw that European drinks companies slumped yesterday on the back of the latest tariff threats. Is that going to be a kind of wake-up call for European markets?
I don't think they need a wake-up call. I mean, this is dramatic times. But, I mean, I think to your point, you're saying, like, European stocks have done really well relatively, and do they get a bit more of the turmoil? And I think that's absolutely right. I think, there's a paradigm shift in Europe, which I completely buy into, and I think it's just a massive story. And I think paradigm shifts are hard for people to trade because, that they change everything they've learnt, of the whole European crisis. But the point is that defence spending is not particularly pro-growth. Infrastructure spending is. In fact, many of the recipients of defence spending will be US firms, and it'll come through very slowly, but it doesn't matter. The story is there. There's a paradigm shift in Europe. Maybe stock markets get a little bit ahead of themselves in a market that's set to be volatile. So yes, I guess to answer your question, I do expect European stocks to struggle a little bit more. And while I very deeply believe in the end of US exceptionalism from US markets point of view over the longer term, the next few weeks that doesn't necessarily matter. We can always just consolidate recent trends.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.